G'day everyone, welcome back to Pete's Investing. Just an update on Netflix. They did announce recently they're going to cut prices in the race to stay on top of the market in terms of their subscriptions. And this is their share price on the daily level. So you can see here, the top chart here with the price chart with the moving average 200. And it's broken up through that level with many traders looking at that as a positive sign to buy. We like to use the CCI 1500 as a more predictive and confident level of entering and exiting the market and trading the market in terms of share price reviews. You can see here the CCI 1500 is still in a downtrend with this moving average 400. It broke slightly above that, but the moving average itself didn't turn to the upside. So now you may have traded this back here potentially if you're based on your technical skills or fundamental analysis. There was a bit of a rise in the share price here, but this was telling you that just be wary that it's still in pretty much a decline. Looking back here over history, you can see here the moving average of 200 is very closely aligned with the CCI 1500 moving average 400. Now here it tells us to buy there potentially into the market, and you would have probably stayed in the trade until it starts confidently, more positively breaking to the downside there. That would have been a nice entry, nice exit point to get out of the market there had you traded that. Basically, we're saying just overall, at the moment, Netflix is probably not a position to buy. But again, that's based on just the analysis using this technical analysis on the CCI. But we're not giving you advice on when to buy, when to sell. We're just giving you some guidance in terms of the trend direction. So basically, at the moment, still in a downtrend until we see this moving average 400 turn more confidently to the upside. To understand how to properly trade using the average down approach, reference the playlist at the end of the video or some links in the description below.
Here are some of my investing rules. Buy proven blue chip stocks only, avoid speculative stocks. The reason for that is blue chip stocks have generally got a good history and a good track record, and you want to avoid going speculative because you're not sure where that stock, especially if it hasn't got any history, you want to avoid making just guesses or gambling on potential trades. Buy stocks which pay dividends. The reason for that is if the price goes against you and you're not closing out according to gaining a profit in the short term, at least you're getting some level of income via dividends if the stock price goes against you. Don't short positions, go long only. So again, similar to the blue chip environment, if you're going to go short, you're basically speculating. And if you are going short and if you have to pay dividends, the dividends will be paid to those traders that are going long. So that'll be just an extra cost in your trade. And don't trade on news. Price is already factored in the share price. If all the insiders have generally benefited from any inside knowledge of the news, and so by the time it hits the websites or the papers, you're getting late on the bus, so you're going to be missing out on any potential gains. Thanks for watching. Don't forget to click the subscribe and the like button and click the notification bell to get all the updates to the channel. If you want to support the channel, subscribe to the Patreon page. The link is in the description below. Happy investing and speak to you in the next video.